everyone. And I would like to introduce myself first. So I am Anam Omar. I am the co-founder and director of business development at Headway Capital Private Equity Investments. And I'm also a full-time consulting gastroenterologist. I welcome you all and on behalf of Headway Capital to our series of webinars with the focus of educating medical professionals like yourself regarding passive real estate investment opportunities and how they can avoid burnout through passive real estate investing. Today, we'll talk about the importance of passive income for medical professionals, the risk associated with only one income source, the link between burnout and lack of passive income, and an overview of passive real estate investing as a solution. This disclaimer is really important. This webinar is for education purposes only and should not be considered as a legal or accounting or investment advice. The information in this webinar does not represent an offer to sell or a solicitation of an offer to purchase an investment or securities. I would advise you all to please consult with your own attorney, financial advisor, and CPA for any legal matters, investments, and specific tax questions. So first and foremost, I would like to tell you all about Headway Capital. Who are we? So we are a total group of about more than 60 personnel who manage assets between Texas and Arizona. But our core team would be Sid Shamim, who is my husband and the founder and CEO of Headway Capital. He is on the webinar today. But the key point of contact for you all would be Brian Alfaro, who's the Director of Investor Relations. He has a fund of knowledge and a wealth of experience with real estate investing, and it's just a phenomenal resource. I would like to tell you all about a little bit about how we came up with Headway Capital. About 10 years ago, Headway Capital was just a vision, and the vision was primarily for us to find a source to kind of park our investment and to preserve our wealth. And that's pretty much how Headway came into being, and that goal hasn't changed over the past 10 years. We continue to be the major investor in all of our passive investment offerings, and that shows our investors our commitment and our confidence in our offerings for them. Over the past 10 years, we have grown remarkably. We have over $500 million of assets under management. We manage 4,662 units. We provide between 7 to 10% of average pref return. And historically, we have provided 25 to 30% of average targeted annual return over the whole investment cycle. We have grown remarkably, and we are very, very proud or humbly proud of our success. And how did we achieve this? We achieved this because we have a very, very strong culture at Headway Capital. We value our people. Our people may be our investors, they may be our employees, our residents, or our clients. We value them and we work hard for them. Our secret sauce for success is purposeful, focused, and disciplined hard work, fueled with consistency, and we believe this will produce results. Now, my husband is very passionate about Headway's core values, and he can talk for hours about our core values. But today's webinar and today's presentation is for you all, unless Sid wants to add anything.
Yeah, you're absolutely right. I think I can talk all day about our the importance of culture that we have created at Headway. In short, we take our vision, our mission, our core values. Again, that's a separate webinar altogether, very seriously. And our vision is to positively impact million lives, which we feel so far that we are over 100,000 lives that we are impacting positively, either through our investments, our passive investment projects, or our residents, or even our clients. So, that's all I have to say right now. But again, like I said, that could be a different webinar altogether, which we do have a plan to talk about our company culture in future.
Thank you, Sid. So moving forward, we should move on the important topic of today's webinar, which is the importance of passive income investment. Now, I think none of you on this webinar today would disagree with me if I would say that one income source is not sustainable in today's world. We have seen and lived through COVID, which has changed the way we think, the way we do not think that we are finite anymore. We value health, we value our time very differently now. And we have seen a major influx of investors since after COVID, because people are really, really thinking about their future. They're not living in today anymore. People are thinking of secure investment opportunities to secure their future, and more importantly, secure future for their families. Now, passive income allows you to gain income beyond your medical practice, beyond your business, beyond your employed job. It allows you to achieve financial freedom, which is liberating, and it allows you to stay stress-free. I think to live a healthy and fruitful life, this is probably the most important key to reduce your stress, and passive income really helps with reducing that. A little bit about the risks of one income stream. There is limited growth potential with a single income stream. You know, if you are running your own business, or if you have your own medical practice, or even if you're in an employed job, there's only so many patients that you can see, or so many hours that you can work, and you will plateau at some point. One income stream allows you reduce financial stability. You traditionally, contrary to what we were traditionally taught, that 401k or other government-funded retirement plans were the way to go. 401k does not provide adequate retirement funds for your future, the future that you have envisioned yourself. And more importantly, it does not allow you to retire early. 401k is dependent on the market, and if somebody wishes to retire early, they have to think outside the box. And passive real estate investing allows you to have that opportunity. And of course, with one income stream, you trade your time for money. You have limited time for personal and professional growth. You people are working more to generate more capital, and that essentially may not be contributing to their wealth, because this capital is exposed to market volatility or market inflation if it's not invested wisely. There is a very important link between burnout that is because of reliance on your active income. I would just here like to talk a little bit about myself. I am a full-time consultant gastroenterologist. I have a very busy practice. And in addition to that, in addition to working 5 days a week, I enjoy being actively involved with my investors, and I also have little kids. So I frequently get asked that questions that, you know, you're using up so much of your time in this. Do you feel burnt out? And I would say no, I don't feel burnt out, because I feel that being financially independent liberates me. It reduces my stress. It allows my work to be my choice rather than my need. And I think that is the key to avoiding burnout. I do not rely on my job or my work for my lifestyle. I have reduced stress, and I have the freedom and the autonomy to make choices for myself. And that is very exciting for me. I think according to moving forward to an opinion-based survey, this is a shocking number that about 40% of physicians in medical groups decided to retire early or leave their practice because of burnout. Now, as shocking as this is, this survey did say that these physicians left purely because of burnout and not because they were financially independent. Now, 10 years ago, I attended a similar webinar like you all are attending today. And I'm really excited for you, because educating yourself is the key. Educating yourself and finding people that you trust, because this is the only way how you can decide the options that suit you and how you would like to preserve your wealth. About another opinion-based survey shows that 69% of physicians are interested in investing in real estate as a way to earn passive income and to diversify their portfolio. But many of these physicians may not know where to start. And that is the key. I think being a medical professional, being a physician myself, I understand that we are very risk averse. We find it very, very hard to trust other people. And I think the key to your success and would be by educating yourself, number one, and also finding a group of people that you can trust. You trust them with your wealth, and you enjoy working with them. Now, the opportunities that we provide at Headway Capital include multifamily apartment complex investment opportunities. We have real estate services. We have a real estate debt fund, as well as a car wash portfolio. This is our newest venture. We had a webinar about this about 2 weeks ago, and we're already oversubscribed with soft commitments for this. This is an 8 car wash portfolio in North Carolina. And you know, it's a unique opportunity, which is very lucrative. You get the opportunity to invest in real estate as well as the business, and we're very excited about this. But we have many similar opportunities in the pipeline. So if you would like to learn more and find out more about real estate investing, please schedule a call with us. So you would like to scan this code here. And after this webinar, you all will also get a link to download our free guide, and you pretty much start from there. Now, I would be happy to answer any questions if you all have any.
Yeah, there are a few questions, and let me pull it up and start reading it to you. Some of it could be answered by you, and some of them it's probably be managing for me. The first question is CJ asked, what % of your own capital invested passively or actively in real estate? What would you say, Nam, on that? You need to unmute yourself.
I didn't understand that questions. Are they asking like what percentage of our earnings are invested in real estate, or what percentage do we invest in real estate?
Yeah, so I think what we can answer is like what percentage of our capital has been invested in real estate. I believe they're trying to compare with this.
Okay, I would say that most of our capital is invested into real estate. Like most of our investment is in real estate. We do not, we as a couple do not believe in volatile like investment opportunities like cryptocurrency or stocks. So this is something that we're personally very invested in. So most of our personal capital is invested into real estate.
Awesome. There are a few more. Where do you guys own or manage your projects? I believe the person asking is the locations. So we have our projects in Texas, in Arizona, and now we have expanded into North Carolina, South Carolina, Florida. So this $500 million of these assets under management span between Arizona, Texas, majorly for multifamily apartment complexes, and then our car washes are mostly in South Carolina, Carolinas, Florida, and Alabama. I hope that answers the question.
Right.
There is one more.
So our next question is, what are the initial requirements for investing? So that requirement depends on the deal. I would say at least a minimum of 50,000, but mostly the initial requirement is 100,000 for a deal.
Yeah, I'll answer a little bit more on that. So the initial requirements are in most cases in deals, passive investment projects that we do is mostly for accredited investors. If you don't know the meaning of accredited investors, I would encourage you to schedule a call. Brandon Fire is our investor relations director, and he can answer pretty much any question related to the investments. The next question we have is, how are you guys navigating current economic challenges? Good question. Anam, you want to take it? I know you may not be but I would love to have you to take it.
Sorry, I think I was muted. So as far as current economic challenges are concerned, I think we our prime I think we what we value is our due diligence. We are very, very thorough with the deals, with our due diligence of our deals. And I think that saves us from a lot of potential challenges. And more so, we're talking about commercial real estate investing. I feel like that's evergreen. It's less exposed to economic volatility, if you would say. People always need a house to live. Most people are always going to get their cars washed, and I feel like that's the key, because the opportunities that we offer are not volatile, are not that affected by economic instability. So we haven't, we didn't even see a major, like we didn't suffer majorly during COVID as well. We were able to recover really fast and come back to our full potential. So I think
I can, and I would also say the current environment. We at Headway, we believe that we are very well capitalized, and we are equipped with any challenges of that kind to handle with, right? So one of the challenges that we have seen so far in the economy is that inflation, right? So inflation is impacting our cost of labor, cost of material, pretty much cost of doing the business has gone up significantly, right? So because at Headway we are vertically integrated, which basically means we don't give our jobs to third party. We actually manage our own properties on our own, which actually allows us to take immediate actions, quick actions, and recover from any kind of challenges, right? So if, to give you a perspective, if we are, let's say, using a third-party operations or third-party operating companies, it's very hard to encourage these guys to move on to do action or take actions actively, right? So these are our strength, right? We are vertically integrated. There's no third party, there's no middleman, right? Our relationship with our investors, we have over, I want to say about 1,000 investors plus investors cumulatively. I want to say 1,500, and if we start adding up all the car wash investors as well, and that's where our strength is, right? So I hope it's a longer answer to a very generic question, but I think hopefully that helps. There's one more question. I think Anam, you can take it, or I can take it. What are the other investment opportunities, or can you repeat about the investment opportunities we have in your firm?
Okay, so we're gonna go back. So I think for those who didn't get this, the passive investment opportunities at Headway include multifamily apartment complexes. We have investment opportunities in real estate services. We have a real estate debt fund, which is probably really, really important for somebody to understand that, but we can always take a call to explain this debt fund, and of course our newer initiative, which was a car wash portfolio. We have the most experience with our apartment complexes, of course, but we have had extreme success with all of the other three opportunities as well. And the car wash portfolio is our newest venture, but we're really excited because it's a lucrative opportunity, which is a mix between, as I said, the real estate, mix between the business as well as real estate, and you're investing in the real estate as well, and that's very unique. So we're really excited about this. We'll see how it goes, but we're excited to have all of the new investors that we've had who are investing in this opportunity as well.
Yeah, I think they're also trying to understand, like, what do we offer? I think, if I'm understanding your question correctly, so we pretty much have, you can call it a menu item of 4 verticals. They're all related to real estate. We don't do anything outside real estate. in our four major sectors are investing passive. We own, operate apartment complexes. So in passive investors can invest in apartments and apartment deals. We now own car wash businesses. That includes, of course, it comes under a real estate vertical, right? So either in apartments or car washes, they're both real estate projects where people invest passively, but they're different businesses, right? They're still cash generating businesses, and that's how we are able to produce between 25 to all the way 30% of annual returns, average annual returns. The debt fund is a third vertical, which is very unique, right? So apartments and car washes are mostly long-term holds, right? You can call it 3 to 5 years hold. And our goal for any of our investments is to double our equity or double our investment between 3 to 5 years. And if that doesn't fit our criteria, we don't touch any project like that, right? So, but when you talk about 3 to 5 years, investors are expected to park their investment or invest in these projects and invest passively, which means they don't do anything, right? Everything is done for them. And they invest on those deals passively, but the money is tied up for at least 3 to 5 years. There are ways to withdraw the investments, and we have a legal structure set up for that. But in a nutshell, these projects are mostly long-term projects. However, the debt fund, on the other hand, is very liquid. And what I mean by that is that, usually we take a minimum of 100,000 on this one, and we pay out about 8%. So and what it means is, you invest your 100,000, you get 8% annualized. Your distributions or your dividends come monthly, and you can liquidate your 100,000 within 90-day notice, right? So that's one of our very famous investment project that people invest passively. The beauty of this project is that this is a very conservatively speaking, a very secure investment option, because with this option, you pretty much are the first lien holder, right? So whatever the capital that the investor wants to invest, that goes as a debt, as a loan, or call it as a, think of it as a bank lending money to purchase a house to somebody, right? So that's what this debt fund is about. So far, we have 0 defaults in there. And even if we have any defaults, we pretty much have a full team to recover and liquidate any asset that we lend on, right? So that is why it's very secure, because Headway, and the partner that we work with, or the lending partner, whosoever, right? We hold the first lien on the project, right? Or first lien on the asset, and that's very powerful. The fourth part is the real estate services, right? So we also own real estate servicing companies. Currently our servicing company is in Texas, in Houston, Texas, and it's a roofing company. We are personally producing somewhere, we cover a pretty big territory. We have a different general manager altogether and different team altogether. But this real estate services it's not open for investors just yet. The reason being is that we just started this business this year, and we do not bring any business that is not run with our own capital and with our own risks for at least 2 years within Headway to be stabilized, make sure they're producing returns, and then we bring it out to our investors. So at this very moment, the real estate services is similar to it's a short-term investment opportunity. It will be a high return ROI type business, but it's not available for investors just yet. We plan to do it sometime early next year. By that time, we will know where we stand to stabilize that business, right? So we want to make sure that this business is actually working, this business is actually producing cash, actually all of the problems are gone, the business has been stabilized before we can produce, give it out to our investors. So in a nutshell, to summarize, apartments or car washes are long-term investments. The advantage of those projects is that you get to participate in the upside, right? So when you sell, 99.9% of the times, all the real estate projects, you sell it for a higher value. And when you get those appreciation, you get a higher profit. Investors get a piece of it. However, on the debt fund side, it's a different project altogether. It's a different product altogether. You get 8% return. The minimum right now, we have 25 and 100,000, but 25,000 spots are being gone. You're just only accepting 100,000 minimum investment on the debt fund side. And that allows you to stay liquid, right? So for example, everyone have this problem right now that we're keeping cash in our bank account, and inflation is eating away at least 4 to 5% every single year. At least I want to say 4%, or I don't know what was the last data came out of, a 3.9 or something like that. So cash sitting in the bank account, it's not going to do any good, right? So that's why we launched the real estate debt fund, because we realized that this is a better way to get our returns on the money while it's sitting there and doing nothing. That's why it's liquid. You can liquidate in 3 months, right? So I think I went over a little bit more than what I was asked for, but I just felt like that we can explain people, exactly what these 4 verticals are, right? So car washes, in apartments, long-term, real estate debt fund, short-term, real estate services. Like I said, we are stabilizing this business, and we don't bring it to our investors unless we ourselves are confident. And by the way, we did the same thing with car washes. Car washes, we launched it this year, but we have been working on car washes for about the last 2 years. So we've been investing in car washes and making sure that this business model works and produce a return that what we expected before we brought it out to our investors. So again, like any responsible business operations, we take this seriously, that what we bring to our investors. Anam, you want to add anything? You're mute.
No, I think you were pretty good with all of that, but
Okay.
but I think that's all the questions that we have.
There
And
is
that's
there's one more. There's
okay.
the two more that came in.
Okay.
Somebody asked, it says anonymous, didn't say the name. How, I think it's directed to you, Anam. How did you start your own journey? I think you covered that in the beginning, but maybe you want to go over a little bit more. Being a physician and a specialist. I'm not sure if the specialist means. I think they mean being a GI person. So, Anam, you want to take it? How did you start your own journey?
Okay, well, so I did go briefly over it, but I think my journey started, 10 years ago. So I was not a gastroenterologist then, but I was deciding my career. And I think I very early on, I was advised by my attendings that, go ahead and start getting your disability insurance. You're in your 20s, this is the right time. And I often thought, I was like, okay, I've been getting encouraged about getting all these different insurances. What's the problem? And soon I realized that as a professional, and particularly as a gastroenterologist, which I wanted to be, even I kind of knew that I wanted to be that at that time, I was it's very dependent on my physical, the physical fitness. What if my hand breaks? What if, something happens? And we started thinking strongly about, investing our money into ways that would generate more money for us, probably make money for us in our sleep even, and kind of preserve our wealth. So that's pretty much how we started Headway Capital, and it was with the sole purpose of kind of investing our own and building our own money and building building a future for ourselves. And we've grown over the years. And now I think I realize that we started off with active investment. I think it was something that I was lucky to do at that time. I think it was because of my husband as well, who did have, a lot of real estate experience even before we started Headway Capital. Many years of real estate experience. He was doing that. But so I had that. But as a busy medical professional, I now realize that a lot of you might not want to be landlords. You have a busy practice, and you want to have a group of people or opportunities that you trust, and that you feel comfortable sort of passively investing your money, and you feel comfortable doing that. And I think that's the key at this point. It's to find good passive investment opportunities with solid returns, and particularly and primarily being able to trust the people that you're working with. So that's the key at this point.
There are a few more now. This is very encouraging that people are asking all questions. I mean, there's no question on the table. I believe we'll take a few more. We blocked about 45 minutes on that, so we still have about 10 minutes, 11 minutes to go. Somebody asked, CC is the name, first name, last name. Somebody asked, how do you manage your time being a full-time GI gastroenterologist? That's what I mean, I guess. And spending time on how are you managing your time between a full-time GI and this? This means, I guess.
Okay, so I did talk a little bit about that too. I think the way I manage my time is I use a lot of my time. I have a very busy practice, and I work 5 days a week. In addition to that, this is something that I really enjoy. I'm very invested with I frequently, I always have spare time to talk to my investors because I'm very invested in my business. And I also have little kids. So I think that combined, it is considerable time that I'm putting into this. But I think what liberates me, or what allows me to do that is my ability to feel that this is a choice, that it's my choice to dedicate this time rather than a need. And my work is my choice. I enjoy my work, which is why I do it. I enjoy my business, spending time with my investors, which is why I do it. I don't feel that I need to do it, and that's my journey. That's how I'm able to not feel burnt out. I think you're muted.
Sorry, there's one more. Somebody asked, why do you think investing passively will alleviate the burden? I don't know what it means.
So investing passively will alleviate the burden. I think, I'm going to go back to our previous slide.
I think they possibly meant the financial stress, right? So financial burden.
The financial burden. Okay. So I mean, it doesn't alleviate your financial burden. It just allows you to be financially free. I think that's our goal for our investors as well. That at the end of, in a couple of years, they should have enough passive investment that's being generated every month that alleviates them from being dependent on their job. And that's relieving a major burden. Like, they can choose not to work so many hours a week. They can choose to take more time off for vacations. They can feel comfortable doing that. Or if there is an emergency, they can feel comfortable, not working during that time. So I think that's it. I mean, I think that's a lot of burden that's being taken off people's shoulders by just not being stressed out about their finances.
Awesome. That's all I have right now. I don't see any other questions coming in. We'll probably give 1 more minute to anybody else to ask any question. Anam, do you have anything else to add before we wrap up?
I think
Yeah.
I think that would be it. I think I would just encourage everyone to like schedule a call with Brian. Anything that's not being answered on this webinar, of course, Brian can answer those questions for people. So just scan this code. You'll be getting an email after this webinar with the link as well. But scheduling a call with Brian would be the key. I think he's a very helpful resource. And of course, we're available as well to take any questions or schedule a call if you would like to talk to us as well. But he's going to be your key resource, and he would be able to answer any questions that you would have. And of course, if you sign up, you will be able to get information as soon as we release an offering, and you can decide, make a choice for yourself.
There was one other question that just came in. Somebody asked about the debt fund. Is your debt fund open? I'm assuming the question is, can investors invest in it? Yes. So we have an active opportunity in apartments as well as car washes and debt fund. The only thing that is not active right now is the real estate services offering. I would wrap up now, I guess. Thanks everybody for your time. It's not easy to come on the evening, especially when you have kids, and some of you might have only seen my kid bothering me when I'm doing this webinar. So on this screen, you can, of course, use your phone camera, and it will directly take you to the link. Brian and Pharaoh, Anam, if you give me a second. So I would encourage everybody to go to our website, read anything and everything that you liked about us, and there are a bunch of education material available on our website. Right, it's a bunch of articles, bunch of blog spots that we have been writing for our investors, and the guide that Anam and Brian have composed about the passive investing, right? So the guide is free for you to download, especially if you're a physician or a medical professional. The guide just talks about the importance and the different strategies of passive income for physicians, right? So don't forget to go to the website and try to download it. Anam, if you can pull up the first website, first slide of the website, and I would like to have everybody have a look at at Brian's full name and picture, and Brian's information is, like I said, is available, so you guys can schedule a call with him directly, or even if you want to talk to us, to me and Anam, we can always excuse out some time for you. Second slide, Anam. Third, possibly second. Third. Yeah. This is Brian, Brian Pharaoh. Tons of experience. He's a straight shooter. That's why we hired him, and he's a partner in the firm as well. He is, if he doesn't know anything, he'll find out the answer. So that's all I can tell about him, right? So of course you can contact him, or if you want to talk to Anam directly or to me, you can always request that, and we'll happy to answer any questions. That's all from my side, Anam. Anything else? You're on mute.
I think that would be all for me too. So I would wish everyone a good evening, and we'll see you probably next week, right?
Yeah, we have every Wednesday. We're bringing these
every Wednesday. Okay, we'll see you next week. Take care of yourself.
Thank you.